Accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, interpreting, and communicating financial information. Accounting is a systematic process. What do they mean by systematic? Systematic means well organized process, or else the process which need to be done through steps. Accounting is a process which need to be done by step. Accounting is a step-by-step process. First of all, need to identify accounting transaction, then we should measure it, then recording, classifying, summarizing, interpreting, communicating. So accounting is a systematic, well-organized, step-by-step process. So why this accounting is important? What is the objective of accounting? Objective of accounting is to provide financial information to stakeholders. Financial information to stakeholders. Accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, reporting, and communicating financial information. What kind of information? Financial information. To provide financial information to stakeholders. Who are the stakeholders? Stakeholders are the parties who has interest over the organization. Stakeholders are the individual or group of people who has interest on organization. Stakeholders are the parties who has interest on the organization. In other words, each and every actions of the organization will affect those stakeholders, right? So stakeholders need this financial information in order to make decision. Stakeholders need this financial information in order to make decision. We'll see an example. Shareholder is one of stakeholders, right? Shareholders or owners. Shareholder is one type of stakeholder. So shareholder need financial information whether the company is earning profit or loss. Shareholder need financial information whether the company is earning profit or loss to make decision. What kind of decision? Whether the company should be continued or shut down. To make decision regarding company's continuing process or the shutdowning process, accounting information is needed. Shareholder need accounting information to make decision whether he should continue the business or else he should shut down the business. To take that decision, accounting information is required to shareholders. Government is one of stakeholders. Government. It is one of stakeholders. So government need financial information to collect taxes. To collect tax, government need this financial information to government to take decision whether the company is liable to pay tax or not, right? So this financial process, financial informations are required by stakeholders in order to take decisions. First process of accounting is identification. First process of accounting is identification. First of all, you should identify what are the accounting transactions. What are the accounting transactions in events? What are the transaction, not accounting, what are the transaction in events need to be recorded? Under this first stage, First stage, accountant will understand what are the transactions and events need to be recorded. Not all transactions in the organization need to be recorded, right? Accountant is not required to record all the transactions in the organization. However, accountant should clearly understand what are the transactions need to be recorded, right? Transaction and events which has monetary value need to be recorded. Transaction and events which has monetary value need to be recorded. In other words, transaction and events which will result in decrease or increase in assets, liability, equity, expense, income should be recorded. If any transaction and event will result changes in accounting, liability, equity and expense and income should be recorded. If any transaction make changes in accounting element, the transaction and events need to be recorded. Again, in an organization, not all transactions need to be recorded. Transaction which has monetary value need to be recorded, or else transaction which make difference, which will affect in accounting elements such as asset, liability, equity, expense and income need to be recorded, right? Then we will look an example, right? An organization is recruiting an employee. So organization is recruiting an employee, recruiting a manager. So that is an event. Recruiting an employee is an event. Does that organization record that recruitment of that employee in its financial books? No. So recruitment is an employee does not result in changes in accounting elements. Recruitment of employee is not a monetary value event, right? Recruitment is employee does an agreement, right? That doesn't has any monetary value. It doesn't impact in accounting elements. Recruiting an employee is just signing an agreement with an employee. Anyhow, paying salary to employee is a monetary value transaction. Paying salary 10,000 salary to employee which has monetary value. In addition to that, this 10,000 will increase the expense of the organization. It will result in accounting elements. So the salary payment need to be recorded in book of accounts. First process is need to clearly identify what are the transactions need to be recorded, what are the transaction and event should not be recorded. That is identification. Second process is measurement. Under measurement, identified transaction and event will be given a monetary value. Assigning a money value, you will identify these are the transactions and these are the events need to be recorded, right? Under this stage, you will decide on which amount those are need to be recorded. Under this stage, you will decide on which amount those are need to be recorded. That is measurement. Third one is recording. Here you will pass a journal entry. You have decided these are the transactions need to be recorded and these are the transactions need to be recorded on this amount. Then you will record the transaction by passing a journal entry. journal entry, right? For example, assume sales, debtors, account, debit, sales account, credit. By the way of passing journal entry, we will record the transaction, then classifying. This recorded transaction, company will have lots of recorded transaction like this, right? Those recorded transaction should be grouped, should be classified according to the nature, right? Here ledger accounts will be created. Ledger accounts will be created. All the recorded transaction journal entries need to be classified according to the nature. So here ledger accounts will be created. For example, sales account. Under sales account, all the sales transaction will be grouped. Right? Fifth one is summarizing. Under summarizing stage, all the ledger accounts will be summarized. All the ledger account will be summarized into trial balance. All the ledger accounts will come in trial balance. Trial balance as debit and credit. All the ledger account will be listed in the trial balance. By the way of preparing trial balance, all the ledger account will be summarized. Here, preparing trial balance. Journal entries, ledger accounts, trial balance. Then interpreting those transactions in a very simple way. Interpreting accounting transaction events in a simple way. Then communicating under this stage, reports will be prepared. Accounting reports, financial reports will be prepared. So we discussed earlier, main objective of accounting is to provide financial information to stakeholders, right? So the company will provide those financial information by the way of preparing and submitting financial reports. For example, balance sheet and income statement. So those are the process of accounting. You should identify what are the transactions need to be recorded. Here, on which amount such transaction need to be recorded. You will pass journal entry. You will group the journal entry according to the nature into ledger accounts. That ledger account will be summarized in trial balance. Then communication. Under communication, you will prepare financial reports such as balance sheet and income statement. Then we are moving to importance of accounting, right? So accounting has two types of objective. First one is primary objective. Second one is supporting objectives. Right? Primary objective of accounting is to provide financial information. To stakeholders. Primary objective is providing financial information to stakeholders in order to make decisions. Right? Providing financial information to stakeholders to make decisions is the primary objective. The organization will provide, accounting will provide such financial information by the way of financial reports, such as balance sheet and income statement. This financial information will be provided by the way of preparing and submitting financial report such as balance sheet and income statement to stakeholders in order to make decisions. So Supporting objectives. Other than the primary objective, accounting will serve some other supportive functions also. First one is accounting will say us the availability of resources. Availability of resources. Second, how these resources are employed. Or how these resources are used. How these resources are used. Third one is what is the results of using these resources. Results of using these resources, right? I will explain it further. In an organization, right, in an organization there are two ways where an organization can get funds. There are two ways an organization can get funds. First, from its owners. Second, from third party. When organization gets funds from its owners, that is known as equity, right? When organization gets fund from third party, that is known as liability. So these funds can be known as resources. Organization can get resources from two ways. First, from its owners. Second, from third party. When organization get resources from owners, that is known as equity. When organization get resources from third party, that is known as liability. So accounting will show how much the organization got from its owners, how much the organization got from third party. So availability of resources, how much the owner gave to the organization, how much the equity, how much is the liability, right? Availability of resources, how much is the equity, how much is the liability. I will take example. Equity is 100,000, liability is 50,000. It will show availability of resources is 150,000. Second, how these available resources have been used. So assets. Organization will get these resources from owners and third party, then use that resources to investments. Organization will invest those resources, that is known as assets, right? So accounting will show how much is the asset, Third one is result of using these resources. By the way of investing these resources on the assets, what is the results? How much company earned? What is the profit of the organization? What is the loss of the organization? That is the results. So way of obtaining resources, availability of resources, 100,000, 150,000, how these resources has been used, that will represent by assets, that is 150,000, right? So profit or loss, what is the results of having those assets, whether it is profit or loss, that is known as result of using these resources, profit or loss. For these two purposes, the organization get information from balance sheet. For this purpose, organization get information or stakeholders get information from income statement. Right? So, fourth objective is compliance with legal requirement. Compliance with legal requirement. One of the legal requirement is taxation, tax. So accounting records, these financial statements will tell the company how much the company should pay taxes. Based on profit, company pays tax, right? When you have accurate profit, it will show how much is the tax you have to pay. So comply with legal requirement, accounting will help. Fifth one is safeguard asset. Safeguard assets, right? For example, the company is giving 10,000 amount to its petty cashier. Petty cashier is the person who does small expenses. So company gives 10,000 to petty cashier and ask petty cashier to do small expenses, right? Petty cashier can misuse his 10,000. Petty cashier can do his personal uses or his personal needs from this 10,000. The 10,000 will be used by personal purposes of this petty cashier. Anyhow, the petty cashier is asked to maintain petty cash book. Petty cash book is a prime entry book, right? Accounting book. When petty cashier is asked to maintain accounting record, he can't misuse the 10,000 because he has accountability. He should submit this accounting record to the management. It should submit this accounting record to the organization. So this account